What's up, crypto legends? So yes, there is a lot of liquidity at $27,000 range and also at the very low 25K level. Which level is going to be hit first for Bitcoin? Now, what we do know is that whatever level is hit first, we are likely to reverse and go and get the other liquidity. I'm going to explain this scenario in today's episode. We're also taking a look at the Coinbase chart because on Coinbase, we did not hit the lows here at $24,800. I'm going to explain this situation where we currently at right now. What could happen? Could we dip down to that level and get a huge bounce, or are we going to come up first and then get the massive drop, guys? Those levels, those setups, that plan will be explained in today's episode, so make sure to stay tuned. Hi there, Andy here. Welcome back to another episode of Bitcoinsensus. Let's dive in here, guys, because what I want to show you, of course, is the liquidity. We know there's a liquidity above us, beneath us. We're currently trading around about the $26,000 area, and there is some significant liquidity at $27,000. Those short positions, those stop losses are around about that $27,000 range, slightly above. There is also aggressive long entries that have their stop losses around about $25,000 area. So which one is going to be reached first? Well, we don't really know that. What we could be ready for is the one that is claimed first, then the other one is going to be claimed, all right? So say if we go to 27K, then we are expecting the movement down to $25,000. However, from $26,000, if we start moving down to that $25,000 area, lower or slightly beneath 25K, then we could be expecting that bounce. And how can we be prepared for this? Well, this is what is going to be explained right away on this chart over here. So this is where the liquidity is right now. This is the daily chart on Bitcoin. So we're looking at $27,000 range and also the low $25,000 area. We are currently trading in the middle of this level. So the one that is going to be grabbed first, we don't really know exactly which one is going to be grabbed first. However, like I said, if we do come down to $25,000 and slightly beneath the level, we could expect a severe bounce coming after the days after the liquidity grab, going all the way up to $27,000. On the other side, $27,000 is claimed first. We would be expecting that follow through here to the downside. That would be the best case scenario because, yes, we've had this bearish structure move down with significant volume, as you can see, confirming the breakdown and possibly that we are going to have a little bit of continuation to the downside in the coming weeks. So that bounce above $27,000 would be pretty good, right? To actually, get into that level over here for a short position to come down again to $25,000, right? However, it doesn't really matter if we do come down first, then obviously I would be expecting that bounce. It is unlikely after such a severe drop like this of almost $5,000 that we had in less than 48 hours, then to have a significant move down here. That is more improbable to happen without a dead cat bounce. Now we can share multiple scenarios here. This is the Coinbase chart on the 4-hourly time frame, and on Coinbase and a lot of spot exchanges, this low here that was created in June at $24,800 hasn't been claimed. So you would expect here on Coinbase and other spot exchanges for that movement down to happen and then possibly have that failed breakout, test the lows here and get that severe pump. All right, that would be grabbing that liquidity, creating a kind of a failed breakout double bottom scenario here on the chart. Let me explain you here scenarios that have happened like this. We can go as back here as November of 2022, where we've had a severe drop with some very strong volume, as you can see here on the chart. And also what we did see here is the price consolidating, having a little bit of a dead cat bounce here, as you can see, and then coming down and test the lows. This test of the lows got a significant rise, as you can see on the chart, just days after getting that low claimed. Can we see this scenario here as well? Well, this is something that we need to be paying close attention once we get that drop. Now, that is the moment of trading opportunity. It is true that we could have a severe drop here, continuation to the downside. So we need to be very careful with good risk management to detect that failed breakdown. It needs to get a bounce. It needs to get a recover, right? On the other case scenario, in the middle of the bear market, we had a similar scenario right over here. A major big drop. This was in the middle of the bear market, of course, that $30,000 range holding very nicely as support, small dead cat bounce. And in this case, as we tested the lows, it just had a massive waterfall drop. So are we going to see something similar to this? Or similar to this right over here in November, where we actually did create that double bottom, test of the lows, and then a pretty nice recovery. So it is easy, it is simple to detect. You just need to be ready in front of the chart to see if that recovery is going to be possible, because I am not shorting the market as we break down. I am not longing the market as we are breaking down either. As soon as we do get that possible recovery, it doesn't matter if you long here, here, or here. It's better to long above the lows, as you know that that recovery is very much a possibility. So zooming in here on the BTC US dollar tether pair here to explain this scenario right away on the lower time frames. And remember, if you are interested in trading this kind of movement, you want to do it on Bybit. Bybit is the best crypto trading platform in my personal opinion. You have $30,000 worth of bonus to claim down below on Bybit. Here's where I do my futures trading. Now, you need to do KYC. If you don't want to do KYC, the best alternative is Bitflex. No KYC. You can sign up with an email and a password, and you also get a great bonus. There is a tutorial down below in the description if you want to learn how to use that exchange for crypto trading. Now, diving here right away and zooming in on this scenario. So like I said, there is liquidity above $27,000 and also at $25,000 area. Which one is going to be claimed first? Well, what we want to analyze here is the possibility of moving here. We're going to zoom in on the 1 hourly time frame, that liquidity grab. How is the market going to react to this high? Are we going to blast through the level and go to $28,000? It is definitely a possibility. What we want to see here is market exhaustion. Get the market to reject from this level and consolidate beneath the dead cat bounce high, which is at $27,000. Now, that wick and that rejection will obviously be a sign of weakness. If we break such a significant resistance level, we want to see massive volume picking in and also blasting through the level and continuation to the upside. So no shorts will be taken if this were to be the case. Large volume breaking through the level is the most important resistance zone that we do have inside of this range. It's been really boring now over 10 days, trading in between $27,000 and $25,200, as you can see with this low over here. So very sideways market action here. I have got into very nice opportunities inside of this level. Long in here, this zone over here. Also in another quick long scalp at this level. There are really nice trading opportunities, and if you want to take advantage of these small little ranges, you want to join the Legends trading community. Here is where I post every single day, also with Sam, which is another mentor here, sharing the analysis, sharing the setups, other altcoins as well. I'm integrating some altcoins here right now because there's no volatility. We're going to take advantage of some other altcoins. You have the Legends trading community. If you want to join for those daily updates and setups for Bitcoin, guys, it is down below in the description, so you can sign up and get those daily updates, especially on Bitcoin. But going on the higher time frame, we need to get out of this zone. We need to claim that liquidity, 27K or 25K. So like I said, what we want to see here above $27,000 is that confirmation of a rejection. No rejection happens here and consolidation. There's no shorts to be taken. Here is where I want to take the short position once we get that reaction from that zone, potentially to come down in the days after this event to the $25,000. This is if we do not drop from the current price levels. If we drop from here and then bounce, I do expect the price to actually have continuation to the upside with a very strong uptrend. Now, if we do come down from this zone, I would expect that bounce. So first of all, if we get above 27K, start getting exhaustion here, choppy price action. That for me would be a clear sign of weakness. Low volume here and lower volume coming into the zone. That is the zone of interest to come back down to $25,000. Keeping it extremely simple, guys, waiting for that momentum. If we were to drop here from this level of $26,000, entering into $25,000 and even slightly lower, I would expect a possible bounce. If we do, take a look at Fibonacci retracement from this pivot low to the pivot high of the dead cat bounce, guys, because that is the pivot low and the pivot high. We do not have a low and a high right here. It's from the lowest level of the drop to the highest level. The 618 Fibonacci is sitting at $25,200 range. Now, of course, we could get that volatility here at this range, but this low here created is a significant level. Here's where we are having all of that liquidity sitting down. I want to see that reaction. I want to see that recovery. If we get the price stopping at this level, getting above the 618 Fibonacci, that is the moment that I will be bullish, because a possible move up coming to 27K and slightly above is very, very likely. So that is the trading plan here for swing trades. Very simple to understand. The liquidity heat map, you can see it, 27K and 25K. These liquidity areas are going to be grabbed in the coming days. Question is, which one is going to be claimed first? We don't care. The one that is claimed first, then we know that the other one is likely to be claimed. So we just need to be ready for those scenarios here. Either come down if we do get that consolidation at the $25,000, 24,800 range. That is the level of interest for that possible bounce. Please note that this could smash through the level, and none of these trade setups can be valid if that were to be the case and we're dropping to 22K or $21,000, right? It's a plan. We need to react to that plan. So this is one of them. Come down first, then come and claim $27,000, or come up to $27,000 and then think about coming down to 25K. We need that reaction. A blast through here will invalidate the trading setup, guys. In a nutshell, this is basically it. Keeping it simple, liquidity, 27K, 25K, the trading plan that we're looking here from this range, escape from this range. However, if it is with low volume, we're looking to come down. If it's with low volume here and we consolidate, we're looking to come back up. Easy plan, guys. This is also going to follow through in the Legends community on how we can trade this with very good risk management. You know the deal. You got the link down below in the description, guys. Hopefully you enjoyed this nice, sweet update. No fancy indicators, simple to understand. Smash up the like button, guys, and I will see you in the next one.